What if I told you there's a formula that can literally predict how much you will make as a trader? In this video, I'm going to show you the exact model that I personally use that is based off 4 simple metrics that can project your trading income with shocking accuracy. By the end of this video, I'm going to show you how this model works so you can understand it, and I'm also going to give you free access to the model so you'll know exactly what to fix in your trading to 2x, 3x, or even 5x your consistency, your confidence, and ultimately your trading results. This video could be a game changer for you, so make sure you watch until the end of it, and let's not waste any more time. Let's hop right into the video. So the first thing we're going to talk about in this video is I'm going to break down what these 4 key metrics are and why you need to understand them within your trading plan. And I'm going to talk about how these metrics have a direct impact on your profitability as a trader. And lastly, we're going to talk about how you could use this model to your advantage. And at the end of the video, I'm also going to give you free access to this model as well, so you can begin using it as soon as you finish the video. And the first key metric that you need to understand is the amount of trades that you're taking per day. And before we talk about this, it's important to understand that every trader is different. No 2 traders are the same. There isn't a correct number of trades to take per day because everyone's a little bit different, right? So the important part about learning how to trade is developing your own style and understanding the type of trader you are. And my goal with this video is to show you this model so you could figure that out for yourself. But it's really important to understand the amount of trades on average you are taking per day. So let's just say for this example, we're taking 10 trades per day, which for some people might be a lot of trades, and for other people that might be not a lot of trades at all. It completely depends on the trader. So let's just say 10 trades per day, just as an example. The second metric that we're going to be talking about is your risk per trade. What is your predefined amount of money or percentage that you are risking per trade? And this is really important, and most traders don't do this. Most traders operate completely randomly, where they're going into trades with random risk, and you can't do that, right? How can you expect consistent results if you're operating randomly, if you're going in with random risk? It's impossible, and that's the easiest way to blow your account and lose all your money. It's to risk random amounts of money, and we always size our positions based on our predetermined risk, which is this number right here. So let's just say for this example, we are risking $100 per trade, meaning that is the maximum amount that we could lose on a losing trade. So if a trade hits our stop loss, we're going to lose $100. The third key metric is average reward to risk, right? So in other words, that is your average winner divided by your average loser. So you might be thinking, hey, we already know what the average loser is. That should be our predefined risk. And you're absolutely right. So for this equation, when figuring out reward to risk, average loser is always going to be constant because that's our predefined risk. Now, your average winner, that's what's going to be variable. And this is going to depend on your management. This is going to depend on the type of trades that you are taking. But I usually recommend to at least aim for 2 to 1, right? So for example, if you're risking $100 per trade, you want to go for at least $200 in profit on the trades that you are taking. So $200 divided by $100, that's 2 to 1. So for reward to risk, let's say we'll do 2 to 1, which is 2.0. And the final metric in our trading that you need to understand is win rate. What percentage of your trades are winners and what percentage of your trades are losers? And again, this is going to vary. And funny thing is, I see so many people online on TikTok that are like, yeah, I have a 80-90% win rate. And as you're about to see, and as we're about to kind of play around with this model, an 80 to 90% win rate is just absurd, right? If anyone is telling you they have an 80 to 90% win rate over a very extended period of time, they are either like unbelievable, elite level, top 0.1% traders, or they're lying to you. So most of these people in these Discord groups that are like, I have an 80 to 90% win rate, they're not showing you their statements. They're not showing you their live P&L. It's really difficult to maintain an 80 to 90% win rate over the long run. Like maybe I have some days where I have a high 80% win rate. It's really difficult to sustain that over a long period of time. Let's just say for this example, we have a 50% win rate. Half of our trades are winners, half of our trades are losers. So let's go ahead and put that, and let's go ahead and see what this model projects. Let's see how much money based off of 10 trades per day, $100 risk, 2 to 1 reward to risk on average with a 50% win rate, how how much are we going to make per day, per week, per month, and per year. So let's take a look at the first part of this model. 50% win rate, 10 trades a day. That means you have 5 winning trades, 5 losing trades. Of course, on your losing trades, you're only losing $100, which means 5 losing trades, $100 risk. You're losing about $500 on your losing trades that day. But on your winning trades, you have 5 of those, and you have a 2-to-1 reward to risk. So on average, you are making $200 on your winning trades. 5 winning trades, $200, which is a 2-to-1 reward to risk. That means you're making $1,000 on your winning trades for that day. So on the day, you're making on average $500 a day, $2,500 per week, $10,500 per month, and $126,000 per year. Now, this is where it gets really interesting. Our goal as traders is to analyze our metrics and figure out how can we make more money by the end of the year. And the only way to know your metrics is to journal, right? You could use an online journaling platform that actually connects with your broker like TradeZella, and there are other trading journals that could actually do it for you, and they'll provide your metrics for you. Or you could do it yourself. Ultimately, it's up to you. But let's say these are our metrics: 10 trades per day, $100 risk per trade. We're operating at a 2-to-1 reward to risk on average with a 50% win rate. How can we increase this number right here? How can we make more money by the end of the year? Right off the bat, the simplest way to do this is to just increase your risk, right? From 100, let's say we're able to increase it to 150. Well, from there, now you're making $189,000 per year. Let's say you're able to risk $200 per trade. That's $252,000 per year. Now, you might be thinking, hey, why don't I just risk like 5 times the amount? Let's say instead of $100 risk, I start risking $500. Shouldn't that mean I'm just going to make way more money? And that might, in theory, be true. But when you increase your risk very sharply, that could lead to like psychological and emotional imbalances within you almost, right? Where you're not going to be comfortable with that risk. So as a result, maybe you're going to end up cutting your positions too early. You're not going to be able to manage your trades correctly. And maybe from now, even with $500 risk, maybe your reward to risk drops significantly to, let's say, 1.2 or 1.5, right? And even with 1.5, you're still making significantly more. But like once, if that risk really impacts you, you might end up having a 1-to-1 reward to risk or a 1.2 reward to risk where you're kind of making the same amount. Does that make sense? So in this case, it's not so bad, but I don't recommend like really, sharply increasing your risk because it usually leads to also bigger losses as well. You might end up incurring a lot bigger losses and you might have a smaller reward to risk because you're just not comfortable managing your positions with that sort of risk. But let's go back to 100, right? So that's one way. We could just increase our risk gradually. And that's probably the easiest way to begin making more money. But let's analyze a different way. Let's say we want to take more trades per day. We want to be less selective with our analysis, right? We're less selective with the trades that we're taking. So we're taking more trades, right? Let's say now we're taking 15 more trades. Obviously, that's going to lead to more money. But if you're taking more trades, that means you're less selective. That means you're probably taking some lower quality setups. So as a result, you might have a lower win rate. So let's say you have now a 40% win rate. Well, that doesn't, you're going in the opposite direction. Let's put it at 45. So we'll cut it in between. You're making slightly more, right? Maybe $5,000, $6,000 more if you're taking more trades, but you have a lower win rate, right? Because again, you're less selective on the setups you're choosing. So that's one option as well to improve your P&L, right? So it's all about kind of playing with it and seeing what works for you. But let's go back to the 10 per day with a 50% win rate. Let's say instead, what you decide to do is say, hey, you know what? I'm going to be more selective with my trades. I'm only going to take high quality setups, but I'm going to go for a higher win rate and a higher reward to risk, right? So let's say now you're only taking 5 setups a day, half. You're taking half the setups you were taking before, but you're going for, let's say now a 3-to-1 reward to risk, and you're going for a higher win rate. Let's say now 60% win rate on average. Well, boom, now you're definitely making way more money. So in this case, being more selective and going for higher reward to risk trades is going to end up being more profitable for you. And as a result, more selective, you're probably going to have a higher win rate because you're only focusing on, a lot higher quality setups, right? So this is where it gets interesting as traders, and there isn't an exact formula formula for this. There isn't an exact, hey, you need to increase your reward to risk and then decrease your win rate, increase the amount of trades. Like, it depends on you. So it's important to play around with this and understand what type of trader you are and how you could potentially become more profitable playing around with your metrics. But real quick, let's also talk about the type of traders, out there. So these are the most common type of traders that I usually come across. We have number one, a high win rate, low R to R trader. And this I would consider a scalper or a micro edge trader, where you take a lot of trades, you have a high win rate, but you don't have a big reward to risk on those winning trades. So in order to make money, you need those tiny winners to sort of add up by the end of the day. And to make this work, you have to be really good at limiting your losses, because if you're not, you could have one losing trade essentially wipe out all of your winners. And we're going to break down every single one on this model. But number two, we have a low win rate, high R to R trader. And I like to call this a home run hunter. A lot of traders actually like to do this, where they don't take a lot of trades at all. They don't have a high win rate. They're perfectly okay with losing. They're psychologically equipped to have 2, 3, 4 losing trades in a row. However, their winners win big, and they go for like a 3-to-1 to 10-to-1 reward to risk, where if they have one winner every 2 weeks, that can just make their entire month essentially. They're not going for a lot of winners, because 1 or 2 wins a month can essentially, make all the money that they need. Then we have a balanced trader. I would consider most traders more or less balanced, where they have a balanced win rate, 40, 50, 60%, 60% obviously on the high end, and they go for 1.5, 2-to-1 to 3-to-1 reward to risk, and they're taking 2 to 6 to 10 trades per day, obviously if they're active day traders. So let's go ahead and break down every single one of these on the model that I just showed you. Alrighty, so let's go ahead and break down the first type of trader that we have here, the high win rate, low R to R trader, and this is for all of the scalpers out there. So let's say on average you are taking anywhere between 10 to 30 trades per day, or 30 scalps per day, and that's going to sound like a lot. I already know there are going to be people in my comments that are going to scream, that's over trading, that's insanity. And like I said, every trader is different, and I'm not going to lie, one of my primary strategies is scalping. I'm a very highly active trader in the stock market, and there are days where I'm pushing 30 to 40 scalps a day, especially if it's a really hot and highly active trading environment. Like earlier this year when the tariffs hit and we had that little mini market crash, there was just so much opportunity every single day that I was hitting 30 to 40 trades per day, sometimes even more, to be honest, right? But then there are other periods of time, like this past June, right? June is typically a slow month for trading, where I'm not taking many scalps at all, right? So ultimately, I take what the markets give me. If the markets provide me a really active trading environment where there's tons of opportunity, I'm going to be taking those opportunities, right? I'm going to be aggressive. But if the market is really slow and there's not a lot of ideas, I'm going to be patient. I'm going to sit on my hands. I'm going to be less aggressive. I'm probably going to be lowering my risk, and I'm just going to be kind of passive, right? So I take what the markets give me. But let's say on average, you're doing 15 scalps per day. So we'll kind of meet in the middle there. I think 30 scalps a day on average is a lot. Like maybe in a really active environment, but you're not going to have a highly active market the entire year. And let's say you're risking $100 per trade on those scalps. And I have here 0.5-to-1 or 0.3-to-1 reward to risk. I think that's a little bit low. Let's be a little bit more ambitious. And let's say you have a 1-to-1 reward to risk, meaning you're making around $100 on your winning trades, but you're also losing $100 on your losing trades. So in order to make this work with these metrics, you need a higher win rate, right? Like if you have a 50% win rate here, you're going to break even. Even if you have a 45% win rate here, you're losing money by the end of the year. So you need a high win rate to make this happen. And I have 70 to 90% win rate. Like I said earlier in this video, 80 to 90% is really difficult to sustain over the long run. It's really difficult to operate at that high of a level. Like maybe you'll have a couple of weeks, a couple of months where you go on a really nice stretch, really nice streak, and you have an 80 to 90% win rate. Like there are days or weeks where I'm operating at that level, but it's hard to sustain that over multiple years or like a decade, right? So let's be a little bit more realistic on that. Let's say you have a 60% win rate. I think that's totally realistic with this style of trading, and you're making $75,600 per year with these type of metrics. And real quick, I want to make this very clear. This is not an exact projection, right? right? That's why I'm calling it a projection. This is an estimate. This isn't going to accurately predict to the dollar exactly how much you're going to make per day or per year. So take this number and plus or minus it by like 5 to 20,000, right? There's just so many variables in trading that we can't include in a model like this. This is a pretty simplistic model, but maybe one day we'll have an AI that can like analyze all of these variables that are really difficult to include in a simplistic model like this, and we can get a more accurate projection. But this is just a projection. This isn't to the dollar exactly how much you're going to make. I really want to make it clear. And that's not really the point of this video. The point of this video is to understand the type of trader you are and to understand what metrics you need to improve on in your trading to, raise your P&L by the end of the year. So you could still make this work. And in fact, I have coached a ton of students where this is what they like to do. They don't like to go for big winners. They like to scalp actively throughout the day. And what they do is they have their winners add up by the end of the day where they'll make 20, 30 bucks here, $60 here, 150 there, 110 here. And they keep their losers relatively small, and those profits stack by the end of the day. Because I think as a beginner trader, it's really difficult to manage a trade almost to perfection and capture a 3-to-1, 5-to-1, or even 10-to-1 reward to risk. It takes years of experience to get that good at managing your winning trades. So I think if you're a beginner, going for more of this model is just really beginner friendly. That's my opinion. That has been my experience with a lot of the students that I've coached. But ultimately, every trader is different. And if you can get really good and you can get this to like a 70% win rate consistently, which is hard, but if you can do this, you can make good money, $150K a year off only $100 risk, right? And of course, this is by the end of the year. This is including all of the really active times in your trading, and of course, all of the slower times in your trading where maybe you're not even taking 15 trades a day, you're only taking 5 or something. All right. And even if you have a bit of a smaller win rate, let's say I have a 0.75 win rate, you could still make money. You're obviously making a bit less, but you could still make this work. Alrighty, let's go ahead and break down the home run hunter, the low win rate, high reward to risk trader. And this is a totally valid model. There are a ton of highly successful traders that do this, that essentially they don't take a lot of trades, maybe 1 per day, maybe 3 per week, but their winners heavily outweigh their losing trades. So let's go ahead and break down and see how this works. So let's say on average, you're taking 1 trade per day. Let's just do 1 to make the math super clean. And let's say you're risking $100 per trade. All right. That's kind of like the default number for this video. And let's say, high reward to risk trader. Let's say you're going for 10-to-1 reward to risk. And of course, it's going to be really difficult to maintain a high win rate if you're going for 10-to-1 reward to risk. So let's say you operate at a 30% win rate, which I think is actually pretty reasonable. So with these numbers, you're making around $58,000 per year, which I'm not gonna lie, seems a little bit underwhelming. Maybe you're a bit more of an active trader and you're taking maybe 1 to 3 trades per day. Like let's say you're able to do 2 trades per day. You're definitely making a lot more, but I'm not gonna lie, it feels a little bit underwhelming. And I think that's what makes this sort of model really difficult for beginner traders. I feel you have to be really experienced as a trader. You really need to know what you're doing to make, this home run hunter type of style. And you're also probably aiming for higher reward to risk than 10-to-1. Like I know people that are going for 15-to-1, 20-to-1. Like that's what would make this work. Like if you're able to get this to 15-to-1 reward to risk and you're just highly selective with your trades, then you can make this a reality. Like if you're averaging, 2 trades a day, even with $100 risk, 15-to-1 reward to risk, which is just so high. But let's say you're able to make it work. You're truly a home run trader and you have a 30% win rate. You could do really well, but it's going to be really difficult to find these sort of home run trades on a daily basis. Like 2 per day, that's like 40 per month. That seems really high in my opinion. Like I kind of want to go back to 1. And with 1, you're making close to 96,000. But these types of traders, these home run hunters, right? They're totally okay with having 2, 3, 4, 5 losing trades in a row. They're psychologically equipped to handle that. And that's what makes them such good traders, right? For a lot of beginners, if you're taking 3, 4, 5, 6 losses in a row, that's going to affect your psychology. That's going to potentially affect your risk tolerance, where now you might have to decrease your risk because you're just taking losses and losses in a row. So to be a home run hunter, you need to be comfortable with taking a lot of losses in a row, and you're also probably risking a lot more. Like let's say you're a true home run hunter. Like I know guys that take like 3 to 5 trades a month, right? Like let's say you're taking 0.3 trades per day. You need to have a massive risk in order to make this work. Like if you have $1,000 risk per trade or even more, you can make this a reality and you can make really good money. But it's just a difficult model to do, especially if you're a beginner trader. Like these guys who are home run hunters, they usually have like a decade of experience. Like I said, they don't care if they have multiple losing trades in a row, because when they see their setup, they really size up and they go for massive winners, and they're usually really good at managing their positions. Like they're not quick to take profits. And a lot of times these guys, if they take a day trade, they'll hold it overnight for 1 to 2 to 3 weeks, where it'll become a swing trade because they have to. If it's just a day trade, like there's only so much it can move in a single day. If they're going for a home run, they're probably aiming for a much bigger move on a longer term time frames. And a lot of their day trades end up becoming swing trades. All right. So it could work, right? It just depends on you. Like I said, I'm not saying this is wrong. I'm not saying this is bad, but what I'm saying is that this is not my style of trading. And I think it's really hard to succeed with this style unless you have years of experience and unless you're a true professional. And honestly, if you were aiming for 15 to 1 reward to risk on every single one of your trades and you're a true home run hunter, you're probably not going to be finding one trade a day that fits that criteria, right? That's 20 trades a month. Like that's a lot. Maybe in a really amazing market environment, you can do that. But most of the home run traders that I've encountered, they go for like 2 to 5 trades per month, right? Because it's just so difficult to find this high reward to risk trades on a daily basis. So like I said, to really make this work, you're not really taking that many trades. You're aiming for a massive reward to risk, and you just have to risk a ton of money to be super profitable by the end of the year. All right, now let's talk about what a balanced trader looks like. And we kind of already did this in the beginning of the video. Like the metrics that we started off with, that was more of like a balanced trader. Let's go ahead and kind of run through it again. Let's say you're taking 5 trades per day on average. Maybe you're taking 3 to 7, right? So in the middle, that's 5. You're taking a $100 risk per trade. That's kind of like the default number we've been using this video. And let's say you're going for 2 to 1 reward to risk, super reasonable with a 50% win rate. You could still make this work. And if this is you, I want you to listen up. All right. The way that you can become more profitable is through number one. I truly think if you just improve as a trader, you can increase your win rate, right? You can get this to 55%. I think you can get this to 60% as well. I truly believe that. I think that's reasonable. I think if you just improve on your selectivity on your trades and you just understand the difference between a high quality trade versus a low quality trade, I really do think you can increase your win rate to this point. I think that's totally reasonable, right? If you told me 70, 75%, I would say that's pushing it, but 60% is reasonable. If you're able to get this 60% with a 2 to 1 reward to risk, that is super solid. From there, what you need to do is gradually increase your risk. And we talked about this a little bit, but you don't want to just like 3x or 5x your risk. And I get this question all the time from non-traders. I used to always get this question from like relatives that were like skeptical about trading. And maybe you guys get this question a lot too, where they're like, oh, well, if you're making this amount of money, can't you just 10x your risk and you'll 10x your profits? And it's like, yeah, in theory, that sounds wonderful. Let's just all 10x our risk and we'll make 10x the profits. But that's not how it works in practice. And people who don't trade, they don't understand the psychological and emotional significance of raising your risk that rapidly, right? If you 10x your risk, you're not going to be able to manage your trades correctly. You're probably going to cut your losers really early. You're probably going to cut your winners really early. You're just not going to be trading the same way. And as a result, you might end up completely messing up all of your other metrics. Like let's say I 10x my risk. Now I have $1,000 risk. In theory, wow, I'm making now close to $1 million a year. I'm super happy, but guess what? You might be so fearful of taking on that risk, you end up not even taking 5 trades a day. You might just end up being too timid. You take only 2 trades per day now, which obviously still makes money. But now let's say you're not able to actually manage your winners at all. Like you're taking $1,000 losses, but now on your winners, you cut them early, maybe because you're fearful, maybe because you're seeing that big P&L, so you take it early. Maybe now you have a 1.2 reward to risk. Maybe it impacts your win rate as well. Maybe with a little bit greater risk, you're a little bit more timid on your entries and and you miss the proper entries, and then you end up FOMOing in. Let's say this all of a sudden drops to 40%. Well, now you're losing money, right? So it's not that simple of just increasing your risk. My recommendation, guys, when it comes to increasing risk is to do it gradually, right? Go from 100 to 120. Great. Go from 120 then to 140. Then from 140, maybe you're feeling really comfortable. You want to take a bigger jump. Great. Go to 200. Don't just rapidly increase your risk, because it's going to lead to psychological and emotional hardship, which you don't want to face in your trading. It can completely mess you up, let alone it can blow your account, right? If you increase your risk too rapidly, you could just lose all your money. It happens to most traders, to be honest. That's like one of the biggest issues. They risk way more than they're comfortable with, and they lose all of their money. A lot of times where let's say they risk $1,000 and all of a sudden they're not comfortable risking that amount. It goes near their stop loss and they're like, oh, well, maybe it can move back up to my entry and I can be back to break even, or maybe it can even continue higher and I'll make money. Or maybe it goes near their stop loss and they're like, hey, I'm going to add to the position. I'm going to average down. And then they add to the position. And all of a sudden now they have like $1,500 risk on that trade. And all of a sudden it goes more and more against them. And that's how they blow their account. You don't want to do that. Raise your risk gradually. And let's say you do raise it to 200, right? And you're feeling it bother you. You're like, oh, like I kind of feel like I'm not really managing my trades right. It's affecting my performance. That's when you go back down. When in doubt, lower your risk. And that's when you go back to that original point at 140 or wherever it was. And you're like, okay, I'm going to stick with this risk for now. I'm going to get super comfortable with this risk. And once I'm more profitable and I'm feeling good, I'm going to raise it back up to $200. Always raise your risk gradually. And by the way, even if you're a balanced trader, you could totally make these metrics work for you. Alrighty, let's discuss the last thing that I want to talk about in this video. And don't worry, I will be giving you free access to this model so you can begin using it to your advantage in your own trading. I'm going to do that at the end of this video. So make sure you stick around until the end, because what I'm about to talk about is also highly important. All right. And when I first started trading, I was always under the impression that I should be using consistent risk for every single trade that I take. So let's say I'm risking $100. I should be risking $100 for my high conviction setups, for my mid conviction setups, and for my kind of, middle to low conviction setups, as long as they're good enough in accordance to my plan. And I did this for my first few years of trading. I would risk the exact same amount for every trade that I would take. And then as I gained more and more experience, I noticed that I would size up on my high conviction A+ setups. And this only really comes with experience, but I've realized that now I don't really have a consistent risk for every trade. I have more of a range of risk for every trade. And I actually only recommend this if you're experienced, if you know what trades, really fit your criteria, and it takes reps in order to figure that out. But I've noticed that my risk right now is anywhere between $300 to $700 or $800 risk per trade. And I only really go to the $700 to $800 mark when I see my high conviction A+ picture perfect setups. And I've realized that my risk is a lot more discretionary now, where I'm not risking the same amount per trade. It's more of a range. Then I figured that, hey, now that my risk has become more discretionary, it's important to reflect that in this model and with my metrics, right? So let's say I'm taking 2 trades per week on average that are my high conviction A+ setups, right? 2 trades per week out of 5 days. I think that's 0.4, right? So 0.4 trades per day. And let's say on those trades, I'm risking $700, right? Which is above my usual risk of like $400 to $500. And let's say my reward to risk on those setups, right? It's pretty high. If it's an A+ high conviction setup that I really like through years of experience, I'm probably looking at a 3 to 4 to 5 reward to risk. Let's say 3 though. Let's just be a little bit conservative. And of course, let's say my win rate, I think naturally it's going to be pretty high. If it's a high conviction setup where I'm willing to size up, in my experience, when I see a picture perfect setup, they work 70 to 80% of the time, truly. So let's say put it at 70%, right? And if this is the case, right, I could add this to my overall, yearly P&L over here, right? Because there's always going to be trades that you're in love with and you're going to size up. And I think that's okay. If you have experience, if you know, how to differentiate a okay setup from a good setup, from a picture perfect setup, why not risk up on those picture perfect setups, right? Like they're not going to happen every single day. So why not risk up on those, right? And this would add a really decent chunk to my P&L by the end of the year, right? And right away, if I, let's say instead of 3-to-1, they're 4-to-1 setups, which usually they are, like I'm making 7, 14, yeah, I'm making usually 2 to 3K on my really high conviction setups, right? You know, that's a really nice increase in my overall P&L by just sizing up on my A+ picture perfect setups, right? Does this make sense? And there are certain environments where sometimes we get a picture perfect setup every day. Like earlier this year with the tariffs, I had a week where I made 48,000, right? It was insane. And we were getting picture perfect setups once to twice a day. It was crazy. So, right, if I was getting one a day, right, that's going to add a massive chunk to my P&L. What I will say about this whole thing right here is that this is so dependent on the market environment that you're trading in. If it's a really slow market, you know, for your style of trading, and it's just kind of like one of those dry periods in trading, which happens, trading is very seasonal, right? It's kind of like any other business. You have really great times, then you have slower times, then you have kind of average times. And the goal is to make all of your money, a lot of your money during the really great times, then making a decent amount on the okay times. And then when it's really slow and dead in your trading environment, that's when you just sit on your hands and you just don't really take any trades, and you could take a vacation, you'd be passive, right? So this whole thing right here is really going to depend on the market environment. And this is what I like to call being selectively aggressive. And I don't know if I pioneered that term. I don't think I did, but I always say this, selectively aggressive. And I think that just perfectly encompasses what you want to be as a trader. You don't want to be aggressive on every setup. You want to be selectively aggressive on your setups, because when you see your setup, you want to make sure you really take advantage. And when, you know, and remember the selective part, if you don't see your setup, you don't trade. You remain passive, you sit on your hands, right? So this is a super cool thing that I think we should all include it within our trading plan. We should have a plan for what we're going to do on our high conviction A+ setups. Alrighty, so to really take advantage of using this model for your own trading, I would, number one, figure out the style of trader you are. Figure out if you're a scalper or a home run hunter, or if you're a more balanced trader, or maybe you're a combination of like a balanced trader and a scalper. Figure out the style of trader you are. Figure out your metrics, whether that's you journaling or maybe you're using some sort of software to journal. And like I said, I will give you guys free access to this model. So I've actually included it in my free 10+ hour course. That is in the description of this video. I genuinely believe my free course is better than most paid courses on the internet. And I think you'll realize that as soon as you start watching my education. But there's literally going to be a tab, a channel in my free course that's called Profit Projection Model. So what I would recommend is begin watching my free course. Start at the top, watch my free course. That's going to build the foundation for your trading. There's no catch. It's literally 100% free. Just click on the link. You could start watching it literally 5 minutes after this video. Watch my free course and it'll build the foundation. It'll teach you like my strategies and stuff. And from there, you can start practicing my strategies, start journaling all of your stats, all of your numbers, and then you can input those numbers into this model. And then from there, figure out what you need to improve on as a trader. And I just want to emphasize once again that this is a projection, right? You could actually use this and add maybe other functionalities to it. And you could add more formulas and math to it and make it even better. You know, you can let me know in the comments if you have maybe additional plans for this model. You can even improve it. Let me know. But that's really the path here. You take like 10 to 50 to 100 trades, depending on the style of trader you are. And then from there, you journal all of your stats, or you use a software, and then you input those stats into here, and then you see where you can improve. And then from there, you refine your trading plan. I call it pair. You prepare, you execute, you analyze, and you refine. And you could use this model to help you with that refinement process. So start my free course. You're going to be able to find this in there. It'll literally be a tab there, just profit projection model, and use it to your advantage. And let me know if you found value in this video. Let me know in the comments, leave a like, subscribe to the channel. I'm posting so much sauce and education about trading, right? Combine using this with my other YouTube videos as well. So leave a comment, like, let me know if you enjoyed the video, and I can't wait to see you guys on the next one. Thank you very much.